Okay, just for a few moments, I want to go through the registration process. Briefly, some of the slides I'll skip out, but just to give you a brief understanding of what would be required. So, in terms of who, when, or the types of registration, and in terms of the information needed for registration and when we should register, I'll try to cover those things quickly for us this morning. Okay, first and foremost, any business in the Bahamas that is doing any taxable supplies and would have met that VAT threshold of $100,000 or more, it is mandatory that you register. Or if as you sit down at any given point in your business and you realize that within the next year you would reach that $100,000 threshold, it is mandatory that you register for VAT. Now, so within this business, we all know that we would have businesses, whether it's companies, etc., or partnerships. Those would be there. And what's also very, very important, things like diplomatic missions or embassies. We're asking that those type of persons or businesses register. And the main reason for that is that if they register any VAT that they would have paid, whether it's light bill or whatever, things like that, they'll be able to claim those things back from the government. As you notice at the bottom part of this slideshow, there is that all government entities and agencies, it is mandatory that they register. And what's also very, very important, where any government service is in the market competing with any private sector, that government agency would be required to register and pay VAT. Now, VAT should be effective the 1st of January, and according to the Act, because of that, every business is required to submit your application on or before the 30th of November 2014. That's very, very important. All businesses are required to submit their applications for registration on or before the 30th of November 2014. Now, so we move forward to next year after VAT would have been implemented and everything else. Under normal circumstances, any business then that would have come up to that VAT threshold would be required to submit their application within 14 days of meeting that threshold. As mentioned previously, promoters of public events or that expect proceeds of that public event to exceed that VAT threshold, you're required to register 48 hours before the event is promoted. So if there's something happening next year and you want to begin that promotion now and you expect that you will exceed that $100,000 threshold, you must register now. Now, there are several types of registration. Those that are mandatory. We have voluntary registration, forced registration, and there's one called group registration. But basically speaking, it's just that any business that meet that threshold or you expect to meet that threshold, it is mandatory that you register. I'd want to say here, too, that anyone who holds a temporary business license, it is also mandatory that you register. And the penalties for not registering are very, very steep. We have voluntary registration. These would be for businesses who do not meet the $100,000 threshold, nor do they think that they will reach so within the next year. However, there are advantages for those type of businesses. Simply put, if you do not register, you're unable to claim back any input VAT that you would have paid. But if you register, you're able to claim those things back. Okay, so even if you do not reach that threshold and you're doing business and you want to be able to claim back some of those expenses, then it's advisable that you register. Any businesses doing any business with the government is also required to register for VAT. Now, because it is not mandatory and you would not have reached that threshold, you have to apply to the controller of VAT for it. And one of those conditions is that you must have a fixed place of abode from doing business in the Bahamas, and that you're able and willing to submit regular returns. That is also very, very important according to the Act. Forced registration then is very simply come next year, God's willing, if any business that should be registered did not register. After a period of time, because of the audit and compliance section of the VAT department, you will be found out. And if that happens, the controller then have the authority according to the Act, after reviewing everything, to force you to register. More importantly, if the controller at that time determines, let's say we in next year, August or sometime, but if the controller at that point determined that you should have been registered from the 1st of January, he could make it mandatory that your effective date be retroactive to the 1st of January, and any applicable VAT payments that should have been made, you will be required to pay those things, in addition to whatever fines that may come in with those. Now, to register is very, very simple. And one of the first things that you do once you register is to receive what we call a tax identification number. This number will be unique to your business in the same manner that your national insurance is unique to you as a person. So that everything you do once you've registered, going from bringing in goods through customs, any type of business, this number will be used so that across the various platforms of government, be it real property tax, be it national insurance, or VAT payments, we'll be able to track and see exactly what's happening at all those levels. Now, the types of information that would be required for registration really are your business license number, the national insurance number, the business license control number. Very important here is the banking information. That will include the bank you're banking with, branch, and account information, including the account type. That is very, very important because everything along with the VAT payments, submitting returns, and everything else will be electronic. And when Mr. Roll spoke earlier, if you are due some payments back from the government for any input VAT you would have paid, this will be the account number that your refund would be sent to. So it'll be extremely important once you begin filling out your application. Everything is important on the application, yes, but this even more so because any claims coming from the government back to you will be going to this account. Another thing very important here, people tend to smile when I mention it, with real property tax assessment number being required there on the application also. With the system that will be used, a revenue management system is all online. The Act provides the controller with the authority that if funds are due to you from VAT that you would have paid, but you have outstanding bills with national insurance or real property tax or any of those, for those funds to be applied to satisfy those debts. Now, on this screen, I've tried to really simplify it just to give an example so that if you notice, just to simplify what will be required for the various business types. Now, because we know that we have a short time to get everything done, some of the fields have been placed as optional, and that's because, like I mentioned earlier, the whole system will be online. And I'll explain that process briefly in a moment. But if you're registering a company, if you notice, the only one we have there mandatory at the moment is the Registrar General's number. We have optional for the business NIB number and for the business license number. However, in the process of vetting those things and making sure that everything is in order, we'll be having access to the business license database, national insurance database to verify what information is keyed there, okay? So even though at the moment those things are optional, once you have them, we're asking you to please put those in. Now, another very, very important point here is that the way the system is set up, You could have someone in your office deal with the day-to-day management of your VAT account, or if you have an accounting firm or someone else that that work for you, you could have them registered onto the system. They'll obtain their own tax identification number. Then they'll be able to go in, register you as a taxpayer, and manages your account. Another very important thing I like to mention here is that whatever the system can be so configured, and you can do this, so that any correspondence that that accounting firm or someone in your office will be dealing with the VAT department regarding your account, and anything coming from the VAT department back to them, it could so be configured so that all correspondence you are copied on, so you'll know exactly what's happening at every point of the way. Now, the registration itself is very simple. The government will be using an online tax administration system that we commonly refer to as the revenue management system. This system is totally web-based, and that is the address www.bahamas.gov.bs/VAT. The way the system will operate is that you would be asked first to log on and create an account. And I would like to say here that in terms of the security features of the system, they're just as strong or stronger than the type of security and encryption features that we'll have on our online banking and internet banking from any of the banks, okay? So in terms of your information being confidential and private, that is being taken care of. So first you'll go on and create a free user account on the system, following which you'll be able to go on, get the application, and if you would have seen from the booklets you have in your seats, there are samples of the actual application form itself. So once you have done that, you'll be able to go on, as I mentioned, to complete the registration application, have secure communications with the VAT department. You'll be able to properly manage your VAT account and also submit your filing, make payments, amend the filing, or request change of information. What's also very important here, as I mentioned there, about submitting payments. Once you would have done your return, whether it's monthly, quarterly, or half yearly, if you owe the government any funds at that time, we're asking that the payment be submitted at that same time also. Now, the registration process itself is quite simple, I will say. Once you have any level of computer knowledge or you're familiar with it, and I'm sure most of us do, it's just simply taking the form, and if you look in the booklets, you could look at those sample application forms now, and in preparation for when the system comes live, and we're hoping that will happen by the 13th of this month, you could look at that form, complete it manually if you care to, and as soon as the system is live, you could log on and complete the application. Once the application is completed, an official from the VAT department on the back end of the system will be able to pick that application up, do all the checkings, and once that process is complete, once that's complete, the system will automatically send you an email, and attached to that email will be your VAT certificate with your registration, your tax identification number, and place of doing business. If you have more than one place of business, in the application form, you will notice that you could fill out the information for each place of business, and a certificate will be sent for each place of business. So you cannot take, if you have one on Bay Street, a business site on Bay Street, and another one Sandy Port or somewhere, you cannot take the certificate for Bay Street and put in Sandy Port. The system will provide you with a different certificate for each place of business. It is also very, very important to remember that that certificate must be displayed within the place of business. And as Mr. Roll mentioned earlier, if you're not registered for that, you're not legally permitted to charge VAT. So if you're not registered and you charge VAT, that is against the law and it's illegal. And the fines are very, very steep. Now, as I mentioned earlier, you could have someone else in the office or an accountant doing your work. If they're going to do it, and if they're not eligible to be a mandatory registrant, they will still have to register for VAT, but they will only get a tax identification number certificate registration. So as opposed to a VAT registration, there'll be a TIN registration quoting because they would need their TIN registration number to quote when they're filling in the applications for you. Now, your obligations, therefore, as a registrant, really are very simple. First, you must have a fixed place of abode from which you're conducting your business. You must be able to file, if necessary, monthly, on a monthly basis, file your VAT return. And it's very important that the returns are due 28 days after the period in which you're reporting. So if you're filing monthly, if you reach that level and you're required to file monthly, then next year, on or before the 20th to 28th of February, you should submit your first return. You don't have to wait for the 28 days. If you finish it in 10, you send it. But by law, it must be submitted within 28 days. You must be able to keep proper records, and as I said earlier, display the certificate. It's also very, very important that you must notify the VAT department in writing within 21 days if there's a change of circumstance for the business, whether it's change of location, change of name or address, or whether it's some temporary closure. You must advise the controller of VAT of those information. The registration itself, I'm going to go a bit quick, but just so you can get a quick idea. The registration itself is quite simple. Like I said, you would log on and create a user account. This is an example of how the screen would look, their first introductory screen. There may be modifications to it in terms of the picture, but in general terms, this is it. Step 2 would be that, like I said, you create your user account with your own unique password with all the security features, minimum of 8 characters, alphanumeric, and a special character within that password. Once you've done that, you'll then be able to go in and register an account. Now, these steps give the various options, whether you are an individual registering for VAT, a non-individual for VAT, a non-individual for TIN only, a non-individual for VAT, or non-individual for TIN only. All of these are different options, as you will see once you go onto the system. Now, these first are just some information that are mandatory. The taxpayer details, contact information, additional information. Now, one thing here that's very, very important that the system will be asking you for is for an email address. Because that will be the address once you log on and create an account that we'll be communicating with you by using that email address. As I previously said, everything is electronic based. So once you have completed the registration process itself, you'll be able to have a printout or show a summary of everything that you would have keyed in before you make that final selection and say everything is okay and have it submitted. We are asking or we are suggesting that if you want to, you could print those screens off so you'll have a manual record of whatever would have been keyed in. And once that is done and you submit your return, you'll get one screen showing you everything. Once your return has been submitted, the system will come back with you, giving you a registration number. So that if at any given time you want to contact the VAT department to find out exactly what's happening with your application, you'll quote that number in your email to us, and we'll be able to go directly to that one. That's the number that it will give you. Now, like I said, once it has been approved and everything has been done, the system will send you a VAT certificate, and that's the way it will look, showing your name, business name, address with your TIN number, and that will be attached to the email coming to you. As I previously mentioned, if there are more than one location for the business, then you will have a certificate for each business location. You'll also be able to monitor the status or contact the VAT office by using a send button on the screen. Once you enter the application itself, you could type in any message to the VAT department at any given time, or you could go onto the system and look at anything happening with your account, any messages there, and everything. You'll be able to obtain those directly from the system. I think that's briefly it. And like I said, it's a very, very simple system, nothing difficult to be afraid of. The whole application process itself, if you have all of the information available, shouldn't take you no more than about 15 minutes to complete the form. Once that is submitted, we are obligated to get back to you within 21 days with the certificate, with the information and everything else to ratify it. Once you get that, you print off your certificates and have them displayed in your place of business. Yes? Yes, ma'am. Now, yes, you can. There's a couple of screens there where you can attach documents if you want to. Now, we would ask for some things to be attached. I know, as I mentioned there about the business license, all those things. Now, even that, along with all of your supporting documentation for your returns, you do not need to send them all onto us. One thing that I know we will be looking for, though, is if you have an accountant doing the work for you, we will need something from you authorizing that. That one is very, very important. But like for most of the others, we expect you to keep them on hand so that if anyone from the VAT department comes to audit you, you have them there available. So you don't have to attach everything to have them submitted. Yes, sir. When you, okay.
Whoever is in the sales position um, collects the VAT. There's legal fees. The lawyer is responsible for the legal fees. As a realtor, you're responsible for that on your commission. Don't link it directly to the sale. Every month or every quarter or whatever, you're going to be filing a return. How much commission you earned and should have collected VAT on? How much expenses? Huh? Yes. You're obligated to collect the VAT on your commission. How when you issue the same way you issue an invoice, your invoice has to bill the amount of the VAT. You issue a VAT invoice or a VAT receipt. Whenever a business or a service provider bills a client, they will explicitly bill the amount of the VAT. You're going to be responsible for collecting that and passing it along to the government. No, you're responsible.
I don't think I think Mr. Roll is, what he's saying is correct, but he doesn't understand the way that it steps. So what is going to happen from what our VAT committee has understood from the guidelines? The agents and brokers, whoever is dealing with the attorney for the sale of this transaction, will have to invoice the attorney the VAT bill. So in other words, we're now going to have another step. Not only do we have to do an offer letter that's sent into the attorney with all the details, we will now have to create an invoice that says if our commission is $10,000, we will then have to create an invoice for the 7.5% and issue to the attorney. And when they're doing their closing, they will issue you a $10,000 commission check and a 7.5% VAT check. And then you now have a VAT check that you will have to forward on to the government.
But what she described is not quite what I want you to do, because I don't want you to knock on the government's door to get your VAT back. What I'm saying is that If you have $30,000 commission and it's 21 or 20 something $100 VAT, you're going to bill the client for 33 or whatever thousand, and you can say, by the way, your bill is 33, 2,000 of this is VAT. At the end of the period, before you give the government that 3,000, you're going to check all of your records and see whether you paid any VAT, BEC, or whatnot, subtract the difference, and then give the government the net amount. So when you look at there's a return form in the booklet. It asks you to list your total. You could scratch out taxable supplies and say, okay, my total commission, including the VAT, and then it says, now, all your operations during the period, and in your case, as a realtor, you may include the fuel and electricity. You may even be paying rent. I don't know, or you may be paying for office services to some other company. All of those, you will list the amount of VAT, do the subtraction. You would list the amount that you spent in that box. In most cases, just 2 boxes, and the difference between the two, you're going to hand over to the government the difference. So it isn't the way when you collect, or when the lawyer collects the stamp tax. The government gets the full amount of the stamp tax because there is no offset. But when you collect VAT, there is a netting that happens before you hand it over to the government.
Patty.
So yes, the VAT registrant is always required to pay VAT on their fees. But both your question and the one just before that, I mean, those are the sort of the examples where in direct relations with BRIA, we can cite those examples and provide like elaborations in terms of what's involved. So we're prepared to do that. I'll take one from over here first. You as a realtor, you are not paying VAT. Me, the buyer, is paying VAT. So I'm the consumer. I'm the one who's consuming your services. So I'm paying VAT. So you're only paying VAT if you're paying on your operating expenses, but your income is not being taxed. Your income, well, it could be taxed if you make the mistake and you don't make the provision for the VAT explicitly. So you always need to explicitly collect the VAT from the client. So the client is paying the VAT, not you. And you want to make sure that the client is properly billed for it. The law says to the client always has to see that VAT amount, the dollar amount of VAT, on whatever billing you give them. So you're going to have to use the proper VAT sales receipt or the VAT receipt. You're going to have to give your clients a proper VAT receipt. But it's not your income that's being taxed. I mean, I understand what you're saying. Now, there's also a concern about VAT in relation to stamp. That point is taken. We think that one of the very early reforms that can be taken up is to get rid of the stamp tax. So maybe as early as next fiscal year. So, because for commercial transactions, what it will mean is that the net cost of commercial transactions will actually decrease, because where VAT replaces stamp tax, VAT is a credit for a business, but stamp tax is not. So the proposal that's being developed is that we should move away from stamp tax and just let the VAT replace the stamp. So on residential, it could mean that there is no net difference, but on commercial, it reduces the net cost of commercial transactions for businesses. So that's something that's high on the list in terms of low-hanging fruits of next round reforms. I'm quite certain that it's something like that. In cases where you have exporters, there are some businesses who won't be collecting VAT at all. They can always be getting net credit backs, and every time they file a return, they're going to be getting payments back from the government. One of the things that we're trying to do just to make sure, because this is where things could really, really go wrong in terms of businesses not living up to the obligation. We've said from day one, we want the account that we pay VAT refunds from to be a separate sub-account from the other account that the government uses to pay, because we don't want it to get caught up in all the other considerations of how quickly payments get made. So we want VAT refunds to be processed separately. The law says within a month of the business submitting their refund request, they should get paid, or they should know why they haven't gotten paid. No, it goes directly to your bank account. Once you've had the clearing to make sure the government isn't owed any taxes anywhere else. Yes. I mean, record keeping is critical, and that's something that we're going to expand upon in future.
There's no functioning land registry to keep excellent records, correct? And there's no universal zoning law in the country. Businesses and individuals who own property cannot maximize the use of their properties without a proper universal zoning law. Is there any plan in the future to implement a proper functioning land registry system where excellent records are kept, where the government and people in the real estate business can access correct information to prevent some of the issues that are coming about, where you might submit a sale to Ministry of Finance and it can be questioned? Because if the records are consistent, then obviously some of these things will be eliminated. Are there any plans in the future to bring about any of those two, plus maybe a cadastral system throughout the whole country, where every property has a lot and a parcel number?
The short answer is yes, because for one thing, I think the Real Estate Association has been lobbying for that type of reform probably for decades. How quickly we get to the registry in the form that you would like, I can't say. But I know that right now we're actually in the midst, in terms of the real property tax reform, of installing a new system which will take us to the stage now of actually tracking, the properties from this point on, having a better idea as to where the properties are, and also from the standpoint of collecting the taxes themselves, being able to monitor and follow up on property owners. But the real property tax reform, because, the convenience of having this done under the Ministry of Finance is that we expect that we can even look at how we plug into the reforms, what happens when you have the sales and the lands and stamps, so that we can actually be getting reliable information on valuation. So, because the valuation is one of the very contentious areas when it comes to stamp taxes. And valuations also in terms of property tax assessment. So very shortly, within months, or it could even be within weeks, we're going to be on the brink of having the general reassessment done, or the mass appraisal done, so that we can see what these property valuations look like. In some cases, some persons will see their rates go up because they haven't had an appraisal done for so many years. And in other cases, depending on what the results are, there may be some opportunity to lower rates. The general reassessment itself is supposed to, if we get a better handle on where the properties are, allow us to adjust rates in such a way that if you're pulling more persons into the compliance side of things, you can give back to some of the more faithful property tax payers in terms of giving them some reduction in terms of their rates. So that's another area that I would flag alongside the stamp tax in terms of a low-hanging fruit, in terms of the reforms in the very, very near term.
Can I just ask if anybody has questions? Is there's Q up here, and then you can use the mic and hand it back over to him. But I just want to answer Ali's question. I have been in meetings over the last several months with the Attorney General and the Minister of Works, and they have assured me and the rest of the committee that we are working on a new land registry, which they are hoping will come into effect within the next 18 months to 2 years. It's very complicated, as he said, but it will be incorporating every aspect, your property tax, your everything to do with you as owning a lot or a house or whatever. So the answer to the question is yes, that is happening, and that will replace the current subdivision act that is currently being used. Yes, well, all of that is included. It's just that it's very, very complicated because we live in an archipelago. We have a lot of generation property. We have a lot of land issues that have to be resolved. Pinewood Gardens is one of those areas that is just massive and has issues, as you know. So it's a very complicated thing, but we are working on that, and hopefully one day we will have a land registry.
Thank you. My question is a little more general. I remember reading, I think in November last year, you were quoted as saying that the total take-in for VAT would be $500 million a year, and that would net the government $200 million a year. And that was at the 15% rate. I have not heard the expected net income for the reduced rate of 7.5%.
For 7.5, the net is $300 million. But so we expect that this will generate about $300 million net. On a gross basis, the number is closer to the $400 million range. And to give you an idea how you get to the gross, there's about 80 million, 90 million that represents the hotel room taxes that fall away, as well as the reduction in customs duties on some items selectively, which include a lot of construction materials. I think that's also important for you to flag that one of the biggest areas for duty reductions in the list are for some very key building materials. So construction materials, the duty reduction, plus there is a change in the way customs will calculate duty as of January 1, meaning that the freight charges that you incur, duty will not be calculated on top of freight. Depending on what you're importing, freight can be very substantial. So the saving from less duty because of the freight charges would also be an area where you can see reductions separate from the lower customs rate. So when you add those together, you come up with about $80 to $90 million in revenue that offsets the total amount from VAT. So that's how we get to the 300.
If I'm a non-viable company, doing a co-broke sale with a viable company, but it is my listing, so my event, my client is exempt, and the viable company has to pay taxes on their commission, right? And the second one is if I am a viable company and another non-viable client is buying from that viable company, does the non-viable client have to pay the VAT on that because they're doing a non-viable purchase with that company?
The way I understand the real estate business, first of all, if it's a VAT registrant, then their transactions always have to account for the VAT. So if you have some small agents mixed with larger ones, larger companies, and you're splitting it, then it means that where you split the transaction, the VAT has to line up with the portion that's going to the client that has to be collecting VAT. Again, that's one of the peculiarities in the real estate sector that we probably need to expand a lot more when we do the guidelines, because it's really the individual who's providing the service that has to account. So if one of the agents is not a VAT registrant, they never have to show up at the government. They cannot issue VAT receipts either.
I think you might have answered this already, but just to be clear, you mentioned that our companies have to be making more than $100,000 to have to pay VAT, correct? Collect VAT. Now, what happens when during the year I have sales and commissions are $10,000 and $15,000, but I've not reached the threshold of $100,000, so therefore I cannot collect VAT from my clients. At that, those bringing in the smaller amounts, and then sometime before the end of the year, I get a bigger commission, taking me up to a couple $100,000. You would then charge me VAT on that particular one, on all of my commissions earned for the year. And if that's the case, that means that we would then pay the VAT on the clients that we didn't charge because we weren't at the $100,000 threshold. Make sense?
I mean, there's a mixture of truth in there, but let me clarify this. It's not that your first 100,000 of sales is no VAT, and then there's VAT on the 100 plus. What we're saying is if your annual sales exceed 100,000 from the first $1 of sales, VAT comes into play. Now, a business, depending on their size, may not be in the $100,000 league yet. But then at some point during the year, it dawns on you that, hey, my business is growing and I'm going to be above 100,000. I'm going to register as a VAT registrant today. It's only what happens from that point going forward that matter. We don't go back. Now, the law also says that if 5 years from today, the VAT department does an assessment and determines that 5 years ago, you should have registered for VAT because your business was above the size, then we can assess VAT on all of your transactions from the 5-year period. So not registering doesn't escape the VAT liability, because if the audit determines that you should have registered, you can go back in time and assess and collect the VAT. That's the easy part of it. I'm not mentioning the other fines and penalties, but the bottom line is you can be assessed back taxes.
Morning. This guy has one of the safest jobs in the Bahamas right now. But what I wanted to find out, and I'm trying to get a better understanding of this whole thing. When you talk about VAT, is really being compensated I'm being compensated for the VAT charges that I would have been charged. Is that correct? And then also, along the lines of what Carmen brought up, the point with the non-vatable agency, I'm being charged, let's say I transact with a vatable agency. VAT is going to be charged in any which way, but it's just that the non-vatable agency doesn't have a chance to recover the VAT that they were charged. Is that correct? And if so, that's 7.5% on the non-vatable agency when that commission is paid, and then I'm out there spending and living my lifestyle. Am I not paying another 7.5%, which means that really in total I'm paying 15% VAT as opposed to 7.5% for the agent and agency who's being reimbursed?
No, it's 7.5% is the upper limit. So what typically happens, like as you were describing, after you've collected the VAT from your clients, you're supposed to hand that over to the government, but then you're reimbursing yourself for any VAT that you pay. So the government gets a residual amount. For the guy who's not a VAT registrant, his charges don't get reimbursed. So what does that mean in the real estate industry? It means that if you're going to adjust the seller's commission, the guy who's not a VAT registrant, he's going to want a higher commission too, because now VAT is an expense to him, which he can't recover from the government. So it isn't going to be the case that one guy is charging 6% and the other guy is charging maybe 7 whatever percent commission to recover the VAT. In all those cases, the buyer sees a higher commission that he has to pay because one guy is recovering his cost directly, the other guy is collecting it from him to give to the government. So that's very important to understand. Everybody has a way of passing along a higher price to the end buyer. It's just that sometimes the end buyer is paying a higher price where the difference is going entirely to the government, and in other cases, the seller or whoever is providing the service is in a cost recovery mode, so there's a higher price.
Good morning. I have a question just to complicate this whole splits thing inside agencies. You know, real estate agents traditionally work as self-employed individuals, but all have to be registered through a brokerage. And it is the brokerage that would be paying or be billed the VATable expense. But what happens when an agent, and this is one of two questions, when the agent who made the sale on behalf of the brokerage is not at the threshold where they would be VATable, how does that work out? The agency is obviously over the VATable threshold, but the agent is not. So that's one question. And then I have another question about the commercial sales. I'm not completely understanding how VAT will be appropriated to commercial sales that have existing ventures that are passed along and those that I don't get the whole thing. Could you just clarify that for me too? Thank you.
I just want to say, when it comes to agents, if I understand it correct, you almost have to put yourself in the position of a company that's buying service. Some of the suppliers are VAT registrants, some are not. So those suppliers that are VAT registrants will be issuing to the company the proper VAT invoices. And if you're a large company where these agents are independent and they're not VAT registrants, then you may be incurring lots of expenses, increased expenses that you can't recover. So it may be for the benefit of those agents to become VAT registrants so that they can pass along increased costs as VAT credits to the larger agencies. So that's just something. So depending on the relationship, agents may well, even a small agent, want to become VAT registrant. Now, let's be reasonable here. Now, if I have a $1 million house to sell, am I going to give it to some agent to sell just because they're charging me 5% commission and the other guy is charging me 6%? That $1 million house may sell for $750 in one case and $900 in the other. I'm also concerned about whether the guy can sell the house. So just because you have a small agent or a lawyer who's not a VAT registrant because he ain't making much money, doesn't mean you're going to go to the cheapest guy, because there's some other things that go into the contract and the transaction that carry a lot more weight than a 3 or 4% differential in the price for a transaction that may not happen for 18 months versus next month. So the reason why the business is small is for a reason. And it's the same reason or the opposite reason why in many cases it's a large business. So it isn't the fact that the tiny business is suddenly being given this huge advantage because they can't pass along the full amount of the VAT, or that there is some disadvantage. You know, quite frankly, if they benefit sufficiently, they'll be in the category of being VAT registrants automatically. Now, there was a second part to the question. Oh, commercial. What would happen in the case of commercial is that the VAT would be charged on the conveyance amount in some cases, because if it's a commercial property, let's say it's a huge let's suppose that this hall was a commercial property and we sold it to the church. So now it's no longer commercial. There is VAT now on the sale of the property from being a commercial now to religious use or some other use. So it's no longer commercial. Maybe it's being converted into apartments. There's VAT on that transaction. On the fees, but also, in this case, on the value of the transfer. I think that's the issue that Bria was flagging, the fact that on those cases, I mean, and that's an area that we're looking at to see how to respond to that particular issue. But if, say, we sold the Mall of Marathon to someone who's going to continue to use it as a mall, so nothing changed, just the ownership changed. There would have been commission, there would have been legal fees, VAT would have been charged, but it's a zero-rated transaction, meaning that there shouldn't be any VAT paid on any part of the transaction. Now, it could also be the case that someone bought the mall and they're going to use the mall as one giant strip mall where they own all the stores, so it's no longer a rental property. So it isn't a going concern that's being sold anymore. So the buyer is paying VAT on the entire transaction. And similarly, the seller is collecting output VAT on the entire transaction. But because the buyer is still going to use it for business purposes, all of the VAT that they would have paid, they would get back as credit. So what we're saying, and in those cases, rather than actually have a cash payment that accounts for the VAT, we issue a proper receipt, almost like you waive the VAT. You mutually agree to waive the VAT. One is not paying it and the other one is not receiving it. So, and again, in a case like that, there is no payment that occurs. So as long as properties continue to remain in commercial use and move about, there is no impact. It is only when it changes from being in commercial use to some other use that those charges take on a more significant effect. When a change of use happens a year later, I mean, there are also provisions in the law for that. And it says that if a business takes any of his assets and takes it out of the use of the business, then you can go in and you can do an assessment as to what the value is, and you treat it as if it's sold to the business self-supplied it in some respect or the other, so that the VAT liability would be now recognizable in that. So it may be the case that you own the property and you divide it in half and you decide to live in half. So you will be assessed back for that conversion, for that amount of the conversion, and that's a part of your VAT liability that would have to be sorted out with the government. So the person who sold the property, again, this is not a tax on them. What the law is saying is you're supposed to have collected this tax from the buyer and then handed it over to the government. So for them, this is no like deducting from their sales price. So that is not like how you do in real estate business. You have net sales and gross sales. You could almost imagine that the net price, whatever the prices you're supposed to be getting, that's not being affected. It's the gross amount, inclusive of the VAT, or the add-on amount that is making a direct account for what the government should be collecting. So if, in many cases, I had mentioned earlier that you may have someone who has a very small business, but it's a commercial property, and they sell it, ordinarily they're not even above the threshold. That may be a case where, in that case, the seller of the property would not have be forced just to become a VAT registrant because of that one-time transaction. So again, the VAT need not necessarily appear in that transaction. Also understand that as a business, every time you pay VAT, it's a credit that you offset. So any business that's not earning as much credit, however, that means they're just paying over a larger fraction of their total sales by way of the VAT that they're collecting. So the credits really just cut in to how much of your collections you have to hand over to the government. Yeah, the real estate like commission and the brokerage fees are always being determined by the what's going on in terms of your commission. Now remember, when you collect whatever you collect as a realtor and you're declaring and you're passing it along to the government, the buyer is between the buyer and the government, or between the seller and the government, as to what happens with the VAT that should have been collected or paid on their end. So if the seller collected it, he has to hand it over. If the seller didn't collect it, then the seller has to have the documentation that satisfies the government that it shouldn't have been collected because someone just bought the grocery store and they continued operating as a grocery store. And the grocer, so it is always, the onus is always upon the buyer and the seller, if they're VAT registrants, to make sure and have that one-on-one relationship with the government to make sure that either the taxes that they're waiving are justified or there's some other treatment that should come into play. Don't say whether the realtor will pay that. Will the realtor collect that? Because if you say pay, it paints a different picture in terms of what's going on. You're not paying that on your sales. You're collecting that on your sales the same way you charge stamp and other taxes. But yes, it's your service in every case. But like I said, if you know absolutely that is not going to be questioned and you can document that is the sale of a going concern and it should be zero rated, then you don't have to collect that on the transaction. But now you have to prove to the government that it was the sale of a going concern. So you can say, well, I can't prove it. Pay me the VAT, and then you go back to the government directly. So in this case, it's like every man for himself, in terms of every man for himself, or every buyer for himself in terms of going to the government and doing the reconciliation if absolutely necessary. Because if you make an error, then you're now liable as a VAT registrant for taxes that you did not collect. So yes, you would. But like, as I said earlier, if you can document for certainty that the client is involved in a zero-rated transaction, then any VAT registrant can decide not to collect VAT on a zero-rated transaction if they can prove. Yes, yes. No, that's why I'm saying. That's why I'm saying you don't know if what the client is representing to you is correct. You know that they should have paid commission and they should have paid VAT. Now, honest or dishonest, they can try to be dishonest with the government. You mean 2 months down the line after they've already paid you the VAT? There's no dealing between you and them anymore. They go to government for that. But who determined that it was zero rated? You did. Mm-hmm. No. Now, when when I buy the property as the mall, all of the VAT charges assessed. If 3 weeks later they change to a different use, then the government goes behind to the owners of the mall and says, hey, you just sold the mall to yourself. So you have to pay VAT on the sale to yourself because you sold it to yourself, and now no, you're out of the picture now. You're out of the picture. So that's like a self-supply. They just sold it to themselves. Yeah. You're not liable in that case. No. But if you are in the midst of the transaction and it's being executed, it's not necessarily the wisest thing to be making the call as to how it should be classified if you're not sure, because everyone who pays VAT that should not have paid VAT can get the VAT back through some mechanism. I don't think that the mic will get this far, but you wanted to. Okay, all right. He wants those who are asking questions to use the microphone.
Mr. Roll, I'm going to change the subject a little bit. When it relates to CAM charges for rental properties, my interest really is on how I'm billing the client and how the government, how do I in turn get my credits back from the government? If I'm billing on a quarterly basis and say it's January and I'm getting paid, all my rents come in January. But in February and March, I have plumbing supplies I have to bring in, or I have to do some air conditioning work or electrical. How do I get that back from the government?
Yours is an example, almost like an inventory example. When you pay determines when you get your credit back. When you bill or when you earn determines when you are supposed to have collected the VAT. So if there's a time difference between when you're billing for services and therefore recognizing revenue, then it could mean that you're incurring more credit in an earlier period. So businesses, for example, could go through a period where they buy a lot of inventory. They get their VAT credits back the next VAT return. They may not sell those products for 6 months. When they sell the products, then they are required to collect VAT on the sale. So if the same thing would happen if there's an unevenness in terms of when your expenses are hitting your operation and when you're passing them along.
Who determines whether you file on a monthly, quarterly, or biannually? That's one question. Credits accrued can be applied against payments from the following months and for what period of time? And 3, customs, VAT that's dutiable or payable, does customs collect that, or do you have an option to charge those against your inputs at the end of your period?
Customs always collect when you bring it across the border. At that point, they collect VAT on any goods that you import, the same way they do with the duty. Now, the question about credits accrued, any period that you're in credits, you use them in that same period. Now, I don't know if you're getting at the fact that if you have more credits earned than VAT that you collected, then there's a net amount that the government owes for you. So the rule is that you wait 1 month. If the credit's still there, then you make an application and the government gives you a refund. So it's 1 month. So it's a 1 month carryover. Now the 1 month carryover, the experience in the Bahamas may change that at some point in the future, but it's really to say that if we're not sure about how we're going to safeguard against fraud and whatnot, we don't want to start off a system where the government is just giving out refunds just like that without making any checks. But at least If I know a business has a credit this month and they may be coming in next month, it gives me more than enough time to do whatever investigation so that when they show up next month, there are no hold up with their payments. In some countries, well, using the New Zealand model, when you file the return, you can say, give me my credit at the same time. But we are being told all the time by you that we shouldn't trust that sort of system in the Bahamas because then the government would get, taken for a ride. But to get around that, because at one point we said that we'd make the VAT registrant wait 6 months or more and jump through all kinds of hoops before they get the refund. So we said, no, let them file the return. If they have a credit and they come back the next period, they request it. If you're filing quarterly or some other frequency, you've already had it probably for at least three months. So in those cases, you can then request when you file the returns also to have the government process the refund, because then you're not going to be back to the government for another 3 months. But the rule in all of it is that we try to make sure that the business doesn't have to wait more than 3 months before they get their monies back. And if you're filing quarterly, that's already 3 months, so you should have the opportunity to request a refund when you file. As to how you get into the filing categories, any business that's over $5 million a year in terms of earnings or vatable sales, they have to file monthly. If they're between the 5 and 400,000, it's quarterly. If they're under 400,000, there could be the opportunity to file half yearly. It may not be an automatic, but it may be based on how risky it is for the government in terms of waiting, say, for 6 months in order to collect the income. But basically, those businesses that are under 400,000 in terms of their revenue, they would qualify to request to file on a 6 monthly basis.
Sorry, do you know when the government will make a determination about stamp tax, if it's payable or not, and hopefully before the end of the year?
No, you mean in terms of when the timeline for when the government would say phase it out? It is a position that the Ministry of Finance supports in terms of one of the early reforms in a VAT setting. We haven't given the government a direct proposal on it yet, but we believe that the government should be in a position to do that assessment by about May or June of next year, because that's going into the budget period.
So I just wanted to be clear. So there's going to be a period where we're going to be paying stamp duty and VAT at the same time.
Yes. Well, I'm when you asked that, I was putting myself in the minds of the buyers. Yes. So, but in those cases, if it's residential, what we're saying is the stamp is on the conveyance and the VAT is on the legal and other charges. When the stamp disappears completely, then it would be, or to minimally, it may be minimal or it may be complete, then it would mean that your VAT is now on the conveyance, and so it would replace the stamp. And that would be the case where if a business is not paying VAT, it's not paying stamp, but they're paying VAT on conveyance, then that VAT becomes a credit. So it's like you've just converted the stamp tax into an investment credit for a business. That's what it really would amount to, if we get there quickly. All right, I'll take 2 more questions. But what I want to commit to also is that through BREA, the guidance note in the form that we have them now, we get back, because we have it in a Microsoft Word format, that we get back a lot of comments from BREA in terms of making sure that we're very clear, so that when we issue updated version of the guide, we actually speak a lot more directly to some cases that relate to the real estate sector and transactions, especially the question about what's happening when I book my sale now and the VAT is being collected and whatnot, and who's paying what amount of VAT to whom, and who's responsible now for passing it along to the government. I think that is a very important question for us to speak directly to.
Before we take the last two questions, I would like to encourage anybody here who still has questions after this morning to please email them to June, and we will, with our VAT committee and the rest of us, will go through them, and if we can't answer them, we will address them with Mr. Roll and get back to you. I would also like to ask, that presentation, is that available to us? So that presentation that was put up there, we will make sure that it gets put on the website so you can, go back and look at it, and that may be where you may find some more questions.
Hi, I have two questions. Normally in real estate, most of the closing costs is already put into the sale of the property, and normally that's paid by the seller. In this instance, you're saying that the buyer pays the VAT, is that correct?
However you decide to divide those costs, what we're saying is that those.
So will it be split between the buyer and the seller paying the VAT?
You're dividing it half.
No, but we all have to be on the same playing field here.
However you divide the cost.
So Bria makes that decision?
The VAT is being divided however you divide the cost.
Well, I'm not, okay.
No, I mean, I know in real estate, sometimes the buyer pays all the costs, sometimes the seller pays all the costs, depending on how you negotiate it. However that is done, that's just how the VAT is falling as well. So
Okay. And also, if they're paying the VAT and we're collecting the VAT on the commission, we're getting that VAT, they're paying that VAT on the commission, we're paying it to the government paying us back. But that person who paid the VAT to us don't get anything from that?
not to you.
They also get something back, the buyer?
If that person on the buying side is a commercial buyer, if that person on the buying side is a business, they're in a commercial transaction, then any VAT that leaves their pocket, they can claim as input credit. But for the residential consumer or someone who perchance bought a property that just changed use, there is no dealing between them and the government. I think this question of what happened with stamp is also something that the lawyers will also have some interest in as well. So yeah, so the industry will be involved. Now I'm not saying, don't leave here today saying that stamp taxes are a thing of the past. I'm saying that is the proposal, and we think it could happen sooner rather than later. Because VAT will replace that. We think we'll get more people to pay their taxes with VAT, and we'll collect so much more revenue that we can give back, or the government can give back through other means.
Good morning, Mr. Roll. Thank you so much for your information. Sometimes I was clear, sometimes I was confused. On commissions, I just want to be clear to see if I understand this correctly. On a residential sale, for example, on the commission itself, that is where the VAT is charged.
Yes.
Okay, so if it was a $20,000 commission, then the 7.5% is charged on that $20,000 commission on that transaction only. Am I correct?
Yes. So the VAT will be charged on the commission, and if the legal fees are $15,000, VAT is on the legal fees.
Okay. Awesome. So I got that right. My second question is, I'm an agent and I'm under 100,000 for the year. So as an agent, obviously I'm not paying any VAT on my income. I'm
You're always under the 100,000. You may have a VAT here and don't collect 100,000. That don't mean that you suddenly disqualified from being a VAT registered.
okay, so you should register. It's basically what you're advocating. Thank you.
No, the rule is that if on average your business is over a certain size, it doesn't matter. Some years sales are up, other years they're down. You can become a VAT registrant. You're not going to be canceled as a VAT registrant just because one year your sales fall below 100,000. I think in the law you have to be below that threshold for at least 2 years. I don't know the exact number of years on the spot, but I know It's a number of years that you would have to be below the threshold in order for you to be